Hey folks, what's going on? Hope you're doing well today. It is Thursday, the 11th of June. What is going on? Let's go over some trades. I had 6 trades on the NASDAQ today. So, gap down after yesterday's FOMC reaction. The NASDAQ was a little bit stronger than the S&Ps, and you can see that now the S&Ps pulled back extremely here because the NASDAQ has started to finally roll over. So generally, what I was watching going into today was this level on the NASDAQ. I don't know if you can see that. This level right here. This 99.40-ish. Okay, we held that going into the morning. We were playing with that a bunch, and then eventually we rolled over big time. But there was lots of opportunity in both directions here in the morning. Now, I had 6 trades today. I messed up my first trade drastically. Okay, and we'll go over that here real quick. So let me just pull up that trade log. And guys, I just want to say one thing real quick. So right now, my YouTube channel is still relatively small. So I don't mind sharing my trades with you guys because I've been thinking about this a lot. But definitely in the future, like if I'm getting 1,000 daily views on these trade reviews, I'm not going to be sharing them anymore. Unfortunately, I'm just going to do some technical analysis. So consider yourself lucky that I'm sharing with you this scalping technique that I do right now. And the reason I say that is not because I think it's something special, but it's because it's something original to me that I've spent months developing, and just giving it away on YouTube for you guys to be like, here, eat this for dinner. For me, it just feels a little off. It feels like when you've worked blood, sweat, and tears to discover something, and then just like giving it away for free just is kind of messing with my head a little bit. So that's kind of what's been on my mind lately. Anyhow, let's get into these trades here. So the first trade was a short, and we'll just use the replay function right off the open here to check it out. So we were in somewhat of a 5-minute downtrend, and we were playing with this 242.55 area, which was the exact level that I had just made you see on the NASDAQ, which was approximately the low of this pullback from 2 trading sessions ago, 242.55. Now let's take a look at what happened off the open, and I'll go through what I was thinking about here. Okay, so the lows of pre-market were at 241.50, and what we got was a pop above 242.50 and then an initial drop here all the way down, breaks the pre-market lows, and slowly started to regain this pre-market low. Now right here, this sort of wedge flag formation here, this is what kind of started to get me interested in a short for a potential second leg down. All right, so I got short here, and I was initially a little bit unsure about where I was gonna place my stop. And that bit of unsurety right there cost me 4R right there, because I didn't put a stop in, and then sooner or later the market kept ticking higher, and I kept looking for a place to put a stop in, and then sooner or later the market was up here. So guys, for me, there's no argument about putting a stop in. You have to have a stop in. If you're trading this kind of style, like short-term scalping, you need to absolutely always have a stop. My favorite way to use a stop is to use a conditional order, because I'm trading derivative contracts, which means that I will put in a market sell order, but on the condition that it triggers only when the underlying trades at or below or above a certain price. Okay, and that's generally what I use as a stop loss, and it tends to work quite well. So what happened was I got short there, and the buyers were very aggressive. I noticed that as they were coming up here, this 80 area, 241.80, just would not drop. Okay, these buyers, every time it would tick down, they would bid it back up, and there was a ton of sells that were getting absorbed. So someone was buying here, pushing this price up on the NASDAQ, and it would just not go lower. That was something I noticed, and those buyers just kept in control here. And you can see once we pushed above 242, it started to accelerate much higher, faster, all the way to near the high of the day here, this 242.50. So I had to be out at 242. But the thing is, again, I was a bit confused as to where to put my stop, and I was thinking probably above here, 242.25, it would have been a wrong trade anyways. But I think a logical place, since I entered around 241.50, logical place would have been around 242.20, 25. And whatever, that would have been the logical stop loss for that trade. And anyhow, I'll show you where I got out. Here. Way too late, right? So things like that are just, you can't do things like that if you're trading, okay? So unfortunately, if you're new to trading, you're gonna have to deal with this a lot, because if you do not follow a mechanical formula, you're gonna get burned. Absolutely. It's gonna take one trade for you to give back 10 of your profitable trades. That's what happens if you don't use a stop. All right, so now this is where it gets fun. This is where the rest of the trading was fun here, and we'll get into this. Here we go. So we topped out around 243.28. This line I had placed here after we had initially topped out. So watch the price action here. After we topped out here, we pulled back here and started to consolidate. After we broke the highs here a second time with no follow through, For me, that was a decent short setup. So I got short right there, looking for about a 1R of profit, and my stop would have been around 243.60, 61 or something like that, okay? Again, just above the even number. 243.50 was a bit too close, so a little bit above that. So I got my 1R profit eventually, and I got out. Okay, now over here, let's take a look at what happened. 30-second chart. You can see that we're starting to trend lower. Now, this is where it got interesting for a long trade. You can see that our low is 240.250. Again, like before, the same level we were watching. We break below it, no follow through. We regain the bid. I got long on this one. It attempted another leg down and then it failed again. So right there, that was a second attempt to get long right there. Now, when I got long right here, my stop was going to be under here, 241.89. 3 ticks below this low right here. So I would have been risking about 50 ticks. Okay, and you can see that 40 to about 80 to 43. There was at least 50 ticks of profit to be gained from that. So you can see that we pushed up and I was getting out here. Okay, I was just sitting on the offer at my profit target of 1R and I got out at my 1R profit target. All right, now take a look at what happens here. We break the highs, no follow through, consolidate again. I'm not interested, but for me, if I see another break and another failure, then I'll get interested. So we broke again into another failure. So for me, that's a good short trade. So I'm going to get back short right there because you can see the sellers are coming in above here. I'm going to keep my stop relatively above, a few ticks above these highs, maybe about 243.80, 81 or so. And what happened was we rolled over there. I took my 1R of profit and that was it. Now, this is the type of trade that if you zoom out and you look at the 5-minute chart, once it really started to roll over, like my profit target was around the 12 and between the 12 and 26 exponential moving average on the 5-minute chart. But you can see that there was a lot more downside in this market and the market kind of made a hard reversal at that point right there. So there was a lot more profit in this trade, but still I just took my 1R and got out of there. So at this point, this is the low we're watching, 242.29. We're breaking it. And again, I'm watching how we're breaking it. You can see that we start to see some buyers down here holding the price up. So there's our first bounce off of the price level. We see another leg down, no follow through. I got long right here with a stop underneath 241.92. So it would have been 88 my stop. Another bear break. And actually this one just kept going. So I got stopped out right there relatively quickly for my managed loss. But again, this trade generally works. So that's why I take that kind of trade where you see a move down, another failure, and then we bounce. And the profit target again was going to be about 1R right around here. 242.80, 90, max 243 as a profit target. But I ended up getting stopped out. So that one was a small loss. Now, as we keep going lower, you can see that the Qs went straight down. Straight waterfall all the way down to the low of the day, breaks the low of the day. So definitely anybody long here got severely trapped. So that's why if you didn't have a stop, you got absolutely shithoused. And lucky I kept my stop right under here because if I didn't, well, the market was in free fall over here, just taking out everybody. So, you know, guys, use a stop, the end. So we got the bounce. Now this was an interesting trade. Let's zoom in there. I didn't take this one. So the low of the day is 241.04. So you can see how we traded it once, we bounced. We traded a second time. We didn't break the low. And then we bounced for a higher high. Now let's see where we topped out at. Around here, 241.50. And you can see how we're attempting higher highs, not much follow through, and we pull back into the range. So this is choppy price action, nothing I'm really interested in. At this point, I became interested in the 2-minute and 5-minute charts because they were providing a better guide. So I decided to take a short trade here, but at a very strategic area. So the price was ticking higher, and I got in above 242 when I started to see the offers printing like crazy, but the price not moving higher. So that's a tape reading skill. It's when you see a lot of prints coming through on the offer, but the price is not going higher. That's a sign that someone's sitting there selling into all those buys. And it's a sign of weakness generally. So if that offer stays held there, then we'll likely see lower prices eventually. So what happened was we pushed above a couple times here. You can see that we're pushing above 242. And the high of this candle was 06. And then the high of the next one was 15. And then we started to trade lower. Now this 242, generally my stop was 30. Above 30 was my stop on this one because we were getting right into the territory of this exponential moving average here. And you can see that above that would have been 30. So the moving average is around 240, 212. I had my stop roughly 16, 17 ticks above that. So 31 was the stop on that trade. We made some lower prices slowly. And as we traded that lower, I took my 1R of profit right around here in the low 241s. And we continued to trade lower. Now, last trade was a long trade. In hindsight, I didn't like this one as much, but it was still a valid trade according to my trading setup. So I was technically going counter the trend. When I got into this trade, we were not necessarily in a 5-minute downtrend, although we were playing with it, right? Because this low here, 240.87, was basically our low that needed to be broken to confirm a 5-minute downtrend. But at the moment, we were kind of playing with it, and it was likely that it was going to fail. So I took a long trade here, and I'll show you where. In hindsight, I didn't like it much because, again, we're playing with the low of the day here. Longs are under pressure. So this is the low I'm watching, 240.87. You can see how we had a break lower and a failure. Another break lower and a failure. I got long at that point with a stop underneath 240.47 because that was the low I was watching, was the low of 3 trading sessions ago, and I was watching that as a key area, okay? So I kept my stop a couple ticks below that. On this bear break right here, I did not get stopped out. When this happened, I needed to be smart and move my stop a little bit lower and not keep it 1 tick or 3 ticks under this low right here at 43. I had to move it into the 30s because if I did that, I would have been safer, because what happened after was, look at this. Stop hunt, candle closing on its high, huge volume. There was a ton of buy orders right down here. They sold it right into here, and then they smashed it right back up. But again, this rally right back to the moving average, see what happened to it. You can see that it just got sold into eventually. You can see we had a higher high attempt. Based on my entry price, there was no profit in this trade. The 1R that I was looking for, we didn't get it. The market kept holding these exponential moving averages. We had 1 attempt, 2 attempts, and then a failure, 3 attempts, and then a real failure. So the market kept getting sold here at 241. It could not tick above 241. And obviously, for a long trade to be profitable here, you would have needed the market to tick above 241.25. That's kind of what I was looking for. And we didn't get that anyway. So in hindsight, it wasn't bad that I got stopped out. But still, at the same time, the concept that I explained was if the market ticks right down to your stop and doesn't stop you out and then moves back, at that point, don't keep your stop where it was. You want to kind of give it a little bit more breathing room in case you get a similar affair where the market breaks by like 3-4 ticks and then bounces hugely. So keep your stops kind of within safe distance from key price points. And that's it. So guys, I had 3 winners and 3 losers today. The first loser really kicked my butt, as you can see, because I didn't use a stop. Anyhow, I'm confident in what I'm doing. Actually, I'm enjoying this quite a bit. It's a lot of fun trading this way. So I'm going to keep doing this. If you learned something from this video, just leave a thumbs up, comment, subscribe, do whatever you like. All right, I wish you guys a fantastic day. Take care. Bye.